Okay, let's go to the biggest of these market-listed entities, and that is the DBXUS. The US at the end should tell you immediately this one is following the United States of America market. Of course, the world's largest. Also home, it should be mentioned, of the world's largest pool of investable assets. So those companies are big, and that's where the big capital flows are. The S&P 500 is the index that it tracks. And remember, that's a capitalization weighted index, which takes all the largest companies listed and domiciled in the US and puts them together. Although, of course, we know that many of those companies make lots of money from all over the world. So we're talking technology, banking, oil and gas technology, healthcare. I said technology twice, but you get the picture. These are the big ones. ExxonMobil, Apple, Google, Walmart, Johnson & Johnson, JP Morgan, all of those kinds of mega caps. This particular index tracking entity on our local market has net aggregate issued capitalization of 4.5 billion rand. So that doesn't mean that is the aggregate capitalization of the shares it's tracking. That just means that's the net value of the DBXUS units that people actually own in the market. And apparently, if you own that thing, you're going to get a yield of around 0.8%. So the share price will reveal that's done well because that market's done well, and then the rand weakening to the euro, the dollar has done well as well. There we go. So that's pretty handsome. So if you bought those at 10 rand 4 or 5 years ago, you're now at almost 30.
Amazing, yeah.
Still a good buy now, though.
Look, so I think what you've seen is, to some extent, the more recently the rand weakness, especially against the dollar, has masked, I think, sort of mediocre to sideways performance of the S&P. And I guess you really do have to look at it at today's price. You've got a point where the rand has sold off heavily. It's actually been coming back a little bit against the dollar.
Yes, so now 15.90.
And the dollar, to be fair, I think had been discounting rate hikes in the US, which may look like they're going to take longer to materialize.
Yes, that's the current mood.
And the issue there is it's actually because the US economy is weaker than people had expected.
Not terrible, but just maybe not as...
Exactly. I mean, and that's really given the backdraft of the global economic environment. So, and that's actually not very positive for equity prices as well, because the US economy is weak and profits may struggle a little bit from these levels. So I think you've got a point where the US economy is going to be going a little bit slower than expected. Valuations in the US are quite high. The dollar might be very strong, and that's actually one of the reasons for the slowdown in the US economy. So it's quite a murky picture, quite difficult to call. Personally, I think the rand's a little bit oversold. So if you're selling rands now, buying dollars, if it strengthens, that's going to be a headwind against performance on this particular instrument. Plus, I'm not that bullish for US stocks, just from a valuations perspective at these levels.
So if you were looking at like a 3-month trade, you probably would not be bullish about this.
No.
But on a longer term view, yes or no? I mean, I know I'm being a little unfair, but these macro conversations, they just kind of come and go. And people say, well, the market knows all, but really it's just, people milling around trying to decide, well, looking at what everyone else is doing. No one's got half a clue.
Yeah, so I mean, now you would be falling back on sort of conventional investment wisdom, saying, firstly, a sort of a tracker, passive investment beats most of the active investors out there. So it's a good default option. It's a good option to put some of your money offshore and diversify away from both the South African economy and the rand. So if you're an investor, you sort of investing on a monthly basis or quarterly basis, and you're wanting to diversify your portfolio, including this type of instrument in your portfolio does make quite a lot of sense.
But right now you're going to go with not hot?
Yeah, not hot. Just I think it's more a market call and a currency call than sort of an investment product call, if you want to say.
Okay, I'm going to lean hot on this one, and we'll tease the reasons for that out as we go. Right.